Hi, everyone. Am I audible? Thank you for joining us. I think we are going to discuss a very pertinent topic, driving real-time, frictionless cross-border trade. B2B payments, cross-border trade is really at the heart of global commerce, and recent innovations have really improved transparency, has driven down costs, has improved the time to settlements, but there is still a large headroom in what can be done. And the next innovation really is in leveraging real-time payments to unlock how we can drive value across the borders in seconds, right? So, and the value at stake is quite large. As per our estimates, about 10% of the global payment revenue pools can be from cross-border transactions. And we have a very distinguished panel here across. We have traditional banking partners. We have a digital-first innovator. We have an ecosystem enabler, and jointly we will discuss how we will unlock the true value from cross-border payments. We will also, so the theme of this year's GFF is AI and the role of AI. In this panel, we'll also discuss the role of AI in taking this to the next level. So without further ado, I'll just introduce the panel and we'll get started. We have with us Kingston, the country head of ANZ, with deep expertise in international financial systems. We have Davies, who is the joint CEO and founder of SendSpend. He's driving a startup which is leading in digital which is leading driving financial inclusion across borders. We have Miss Nikita Tambday, who leads the Treasury services product with JP Morgan in India. And we have Maha, who heads the Singapore Center for the Bank of International Settlements. So welcome, everyone. So we'll start with Maha. Maha, real-time payments is, we are unlocking real-time payments in about 70 countries across the world. How does this lead to B2B payments, and how does this unlock the next wave of innovation in cross-border payments?
Thank you. I'll start by saying it's a real pleasure to be here, and a topic that's close to my heart. So thanks for having me on the panel. So I think the success of instant payment systems has been quite phenomenal, and the proliferation of instant payment systems around the world is really. It's kind of been noted and remarkable, and so that infrastructure is there. It's there and it's successful. It's successful on a domestic level, and more there's been kind of discussions, particularly in this region, actually, with India being at the heart of these discussions. How can we leverage this infrastructure for cross-border payments? How can we make cross-border payments more efficient, less costly for businesses, but also for consumers? And so instant payments and looking at how you interlink them either bilaterally or multilaterally has been one response to that. There's been other responses, so this is just one response. I'm not going to necessarily say that it's the only one. I mean, there's a lot of private entities out there. Some of the closed-loop systems, the banks, the non-bank financial institutions have also played a really important role. And why is that? I mean, when we talk about instant payments, we automatically feel that it's more sort of on the retail side, but actually, whether it's large businesses or small businesses, and there's a lot of talk around the need for instant payments for small businesses who are starting to trade cross-border a lot more, or have been for a while, and that cash flow certainty and the instant payment sort of for them is key. It might be small payments, but we can't ignore the fact when it's large payments, wholesale payments, it's obviously of vital importance as well. But for these smaller players, for these smaller merchants who are often you know, the real sort of backbone of many economies, actually small to medium enterprises, to allow them to actually trade cross-border with certainty, with trust, and being able to get that cash flow instantly is very important. So I think there's a lot of reasons for governments, for central banks, for markets, for private institutions to really want to solve this, and we're seeing that. It's an exciting time because we're seeing announcements here, we're seeing announcements everywhere, and it's exciting to see that there is a real kind of momentum in the market to really try and solve cross-border payments. It doesn't happen overnight, and there's friction points that are beyond just, you know, let's connect systems. There's regulatory requirements, legal, etc., that need to be worked through. There's clearing and settlement, there's compliance, and so on. But you know, these conversations are being had.
Thank you, Maha. So we have both traditional bankers and a digital first innovator here. So why don't we hear from Carl and Nikita on how you are leveraging, how you are, you know, innovating in this new scheme of things in cross-border payments. Carl, why don't you go first?
Thank you. I think as a traditional market participant, we see frictionless payments really, really important. And I think if I look at it from an institutional lens, where I sit, we've had an enormous amount of learnings from our retail bank. And our retail bank customers demand speed, speed, and more speed. And a lot of that has been driven by the competitive market, driven by fintechs. But I think if we look at that through an institutional lens, we've got a massive opportunity if we get this right, not only for ourselves, but for our customer base, delivering some really efficient treasury and cash flow operations. And I think to that point, from an ANZ perspective, we released last year ANZ Express Payments, where we were the first bank to introduce real-time cross-border payments into Australia. And you know, we've been able to leverage the NPP, National Payment Platform rails, to be able to deliver that 24/7 in about 60 seconds. And I think, you know, previously they were payments that would have been the preserve of the RTGS network and time windows. So it's really been a big step for us, and it's been a big step for our market. And I think, you know, holistically what that means is that allows us to be competitive not only in the traditional space, but also in the non-traditional space with non-banks as well.
Thanks. So first of all, it's a pleasure to be here with all of you on this panel. From a JP Morgan perspective, we are driving innovation by combining technology, partnership with a strong client focus. One of the areas where we have seen real impact is with our global Kinexys digital payments platform. This enables our institutional clients worldwide to create, transfer, and settle tokenized assets, making payments instantly tradable and programmable. What took days can now happen in minutes with much lesser paperwork and fewer intermediaries. Kinexys also facilitates 24/7 dollar clearing. For instance, one of the leading banks in India is using our platform out of Gift City to provide their clients with seamless international payments. Another exciting use case for us has been programmable payments. Corporates can automate their payments using smart contracts, ensuring that funds are settled instantaneously once certain predefined conditions are met, like delivery of goods or project milestones being met. So this actually shifts corporates from a static cash flow forecasting to a more dynamic real-time funding module. Closer home in India, where cross-border transactions still require regulatory checks and documentation, JP Morgan India is leveraging API-powered infrastructure and intelligent automation tools to deeply integrate with RBI's import and export platforms. This helps us to offer our corporate clients in India with paperless processing, real-time tracking, and automated regularization of import-export transactions, all within the required regulatory guidelines. Our corporate clients have seen more than 60% reduction in the turnaround time with greater transparency and simplified compliance with Indian requirements. So overall, I would like to say that these innovations have delivered us significant efficiencies in terms of operational costs reduction, faster speed, and more importantly, a seamless client experience. I think from a future perspective, we are quite optimistic about innovations in this space and are looking forward to collaborate with clients and fintech partners to unlock more opportunities in cross-border commerce.
Thank you, Nikita. So we recently did a survey with some of our B2B payment clients, and the top 3 things that came up as the friction points in cross-border trade. 2 of them Nikita already mentioned. The one was obviously cost and the speed of settlements, and then the third was transparency. So Graham, as a digital-first innovator, right? How do you solve some of these pain points, and how are you differentiating in the market?
Hello, everyone, and thank you for inviting us. I'm very, very honored to be here. So we hit really the sweet spot. As a fintech and an innovator, we've got a lot more flexibility than larger banks. We focus on exactly what Maha was talking about, is the B2B. The small businesses, the 1, 2, 3 man, up to 20, the businesses that account for about 80% of any economy in a country. Traditionally, banks and cross-border payments were really handled by banks, and the banks would have a correspondent bank. The money would be sent from one to another, maybe take 1, 2, or 3 days, and then finally get to the recipient. No one would hear anything about what's going on in between. You would cross your fingers and hope that it got there, and then get a message. So things have now changed. Banks or neobanks, fintechs like ourselves, we use APIs, as you all know, to do the transaction. But what's important is we're not just doing the money, the flow of the funds from one side to the other. We're able to complete both legs of the transaction. One is the payments acquisition. So companies like ourselves, we've got open banking at our fingertips. So open banking, which in India is pretty much the UPI network. Overseas in the UK and Europe, there's open banking, which is mandated by the PSD2. This really allows fintechs now to handle a lot more. So from a cross-border perspective, you no longer have to go onto the website, where a lot of small businesses rely on the card networks for the customer completing the payment. That doesn't happen anymore, and it will soon be gone. Customers now can pay directly with their bank account, not just with domestic, but with cross-border. So through open banking, we have a payment gateway that sits on a merchant's website in a country far away, and someone in the UK or Europe can just authorize that payment using the banking app. No need to use MasterCard and Visa. And then the cross-border settlement gets done directly with a bank partner. So we have countries that we can send money to in 17 seconds. And that's not to a bank account, that's to a mobile wallet. So we're bringing in not just people with bank accounts, but we're bringing in, especially in emerging markets, those that don't have bank accounts. So if you look in places like Kenya, there's M-Pesa, which is a mobile wallet. Nigeria, it's Momo. And here in India, you've got is it Quick Cash, and you've got Airtel, and a number of mobile wallets. So we enable and a lot of the small businesses, especially one-man bands in countries doing various different services, we can send that money direct. The payment can get processed, authenticated, screened. So we integrate with various different screening companies, like the Dow Jones, to do real-time screening. So all this, within seconds, a payment can get processed and the money can get sent back to the merchant rather than having to wait days. There's one more thing where the existing banks, why I think one of the reasons is that they sort of struggling to keep up with fintechs like ourselves is the infrastructure on existing banks is still quite legacy. I mean, I'm quite horrified sometimes to find out it's still sitting in a big server in a data room somewhere with padlocks on the door that no one can get into. I mean, everything's in the cloud now. And that's just a virtual cloud. It soon will be right up in the cloud in the satellite. And that's what enables cross-border to become a lot more, from a technical perspective, a lot more easier to do, is we're not having to connect cables and different systems from different countries. It's in the cloud and can be a lot quickly scalable for multi-country and multi-currency payments.
Thank you, Graham. I think the headline was cross-border trade in 17 seconds. Right? Yeah. So thank you for that. So I think we heard perspectives from the traditional players, we heard perspectives from the digital-first players, and from the ecosystem enabler. Now we move to the next, that's a segue to the next question on, so we are in an AI super cycle, right? So, and all players are looking at leveraging AI across the value chain. So in payments especially, we think that there is a lot of value to be unlocked on both sides, both in terms of providing a seamless experience to the customer, and also in terms of unlocking efficiencies within the payment players ecosystem. So a question to all our panelists, who wants to take this on, how do you think you can leverage AI across the value chain in payments?
Okay, and maybe I'll go first. So I think we have seen AI make a great lot of difference in the way we handle cross-border payments and trade. We are using AI to speed up our KYC and client onboarding with automated document matches and real-time risk assessment. We are also rolling out document fingerprinting, where AI will create a unique digital identity for our documents like invoices or trade contracts. This will help us to easily verify and match the documents, do the due diligence, thus reducing the manual work and the error of risk and frauds. From a security side, we are using AI to closely monitor our transactions efficiently for sanction screening, detecting suspicious activity, or quickly adapting to new fraud patterns, reducing the number of false hits, with the goal to ensure that legitimate transactions keep moving without any unnecessary delays. So we have really seen AI deliver tangible benefits in terms of speed, accuracy, and cost. We've seen our operational costs and turnaround times reduce by at least 60 to 70% in some of the areas, and reduce the friction in the BAU processes for cross-border. So really excited to leverage the potential of AI to safeguard our clients better and deliver smoother cross-border trade.
We're working. Just an extension of that observation. I think AI is a journey that we're all on. And I think from an ANZ perspective, we're largely still at an experimental stage. And to the point, we certainly do use AI and all of the facets you just mentioned. I think, and again, payment review, repair management, being able to speed up processes, all absolutely happening. But I think that the true potential, we've barely unlocked it. And I think to your point, being a bank with very large and deep legacy systems, it makes that more challenging to do. But I think, again, some of the automation we expect to happen with Treasury systems in the near term, we can see the potential for customers to have an order change, and therefore their funding or credit requirements changing, and that to be an automated process. So I think that's all just around the corner, but still very much at the experimental stage.
So one of the areas with the cross-border payments and then the cross-border settlement to merchants is there's still a risk involved that the product that's been delivered might go wrong, or there's some issue with the service delivery. So what we're looking to do is try and get to a situation where all the merchants can get settled in a T+0 or T+1 at the very least. So how do we do this, and can AI help us? And we've been thinking about, is there a way? And I'm not sure there's a way that AI on its own can come up with that answer. But my feeling is that you've got to look at AI to work with something else. And so what we're thinking about is, can you integrate or get AI to work with some kind of insurance product so we can insure the transaction against it going wrong, but using some clever insurtech with some AI at the same time to look at that transaction and say, okay, this is the insurance cost of it going wrong. Let's come up with a model that says, right, we can settle anyone for any transaction in T+0 but insurance cost is spread. So I think when you look at AI, it can't just be like AI is going to do it on its own. You've got to look at it working with other things to come up with a better solution.
So I'm probably going to come in with the doom and gloom now. Sorry about that, guys. I think AI has got tremendous potential. That there's actually the optimistic side of AI is that everybody is using AI one way or the other. You know, and I think we all seem to think that unless we're using kind of ChatGPT or we have like this, you know, robot that's doing things for us, that we're not at the cutting edge. You don't have to be. I don't think we're necessary. And it's really important to be very measured and very mature about how you want to use AI for your organization. Some really cutting edge AI companies, of course, they're going to use AI in a way that's much more, you know, forward looking and front running the market and everything else. But, you know, we work with central banks. I mean, the central banks aren't going to want to do that. They want to, you know, really kind of safeguard the financial system. And sometimes looking at what models, we were recently looking at one of our projects where we want to share fraud patterns, not underlying data, but fraud patterns across jurisdictions. And we kind of thought, well, we don't want the transformer models, the state of the art, the latest, because it goes into a black box. We've got no idea how to explain that. We would much rather use traditional AI models for this particular purpose. And as if we kind of train locally and then the output goes into a global model, that global model, we can compare it to the local model and it performs better, we're moving ahead. But we're not necessarily going, you know, really, oh, we're front running with AI. And that's my word of caution on AI is let's all be fluent in understanding, in the language, understanding what it does. Let's not be, you know, paranoid that we have to be right at the cutting edge of it, but let's use it and learn and share the knowledge. Communities where that's what we're trying to build as well, communities to share the knowledge on AI so we can all quicken our learning curve, because it's a steep learning curve and we've got to get there quickly, is really important. But the one application that we look at in terms of AI is fraud detection. We think that this is an area that's going to get worse. Fraud and scams get worse with deepfakes, with AI that is incredibly powerful these days. And we need to use technology, and I love this quote, I quote it all the time, from actually a colleague of mine from the MAS. Use technology for good to fight technology for bad. So we need to understand what AI can do for us to actually solve some of these really, you know, key issues that are facing us actually in payments in particular.
I think two things that I really took away from that. One is that the explainability of AI is very important in driving cross-border transactions. And I think so one of the things that we talk about AI having a left brain and a right brain, right? The creative part and the traditional AI part, they need to come together especially in high stakes environment like cross-border trade. Maha, that's a great segue. I think the next question is also for you in terms of as we leverage AI more and more for, let's say, automation in international payments. What kind of risk guardrails do we need to look at to make it foolproof?
That's a big question, I have to say. If anyone has an answer, they're probably a millionaire by now. Look, I mentioned the need to, the key thing is that looking at the fundamentals in terms of the outcome that we want to achieve, and how do we ensure that that outcome is achieved. The balance between innovation and safety, let's say, and a risk-free environment there's no such thing as risk-free, but you know what I mean in terms of maintaining safety and security and allowing to innovate is a really fine line. And so from a central banking perspective, it's really understanding what these things are, what they do. Sandboxes are great, actually, for these sorts of things. And bringing in public-private partnerships, which we're seeing quite a lot of, and that's a lot of our work as well, to be able to learn and experiment. One of our communities of central banks regulators come together, and the real coders actually come together and start to test use cases. And that allows everybody to understand, well, what risks are these posing, and how do we therefore mitigate those risks or make policy choices to make sure that those risks don't crystallize. But AI is a very it's not as simple as we experiment, we work out the risks and we move on. It's moving at such a speed that we always need to be catching up or considering how we continue to experiment. And so I don't know if that answers your question, but specifically, one of our projects actually, which we launched out of the Hong Kong Centre, is looking at explainability of AI models. So again, where are we finding the risk? We're all wowed by AI. I know everybody is, but the explainability issue is a problem. So we're experimenting with how can we explain, some of these AI models. We have to ask ourselves these questions and we have to push the boundaries. We do it in a small, contained sort of environment. We contain the risks, we share the learnings, and the cycle continues. And everybody has to do that because that's how we learn together.
Thank you, Maha. The one last thing that we want to discuss with each one of you is, let's say we meet 5 years down the line here, right? So what is that one breakthrough that you think would have transformed cross-border payments?
So I think the one big thing that's holding up, real-time cross-border at scale is standards. Getting one standard so that the different financial systems can talk to each other. Just in Europe alone, there's 27 countries. There's different systems just within that, even though there's open banking in Europe. We've connected up to all the different countries and banks, and in Germany alone, there's 3 different systems for open banking. So that will make it, if there can be a common standard that everyone has to conform to, that will at least be a starting point to get global real-time payments at scale. So in 5 years' time, if we've achieved that, I think we'll have it.
An extension of that, I think we will get there. I think we'll get there quickly. I think there's a lot of commitment. I think there's a lot of goodwill to achieve that. 5 years is a long time when you're dealing with AI. But I think at the end of the day, what we will see is cross-border transactions looking and feeling very similar to domestic transactions today, and with that speed and that efficiency. And I think at the end of the day, not to lose sight of this, who's going to be the winner? It is going to be our customer. And I think if we come back to the customer and what we can deliver, that's going to be the ultimate prize here.
So yeah, if I dust up my crystal ball and look at 2030, I hope that we would have an evolved open API ecosystem that is paired with a secure universal digital identity framework. So picture this, corporates, banks, fintechs, regulators are all able to seamlessly connect through open AIs, exchange data, and verify identities instantly. I think this would make cross-border trade more efficient and more transparent. And more importantly, for a country like India, it would enable businesses of all sizes to tap into the global market, as the open API ecosystem and digital identity will break down barriers, make trade more safer, more faster, and more inclusive. So yeah, looking forward to that breakthrough in 2030.
All I would say is that I hope my fellow panelists' dreams will come true in 5 years' time.
Okay, so I think we are at the end of our discussion. So I think it was a very distinguished panel. So we had traditional institutions, digital-first players, ecosystem enablers, all coming together to discuss the future of cross-border payments. I think we have about 5 minutes left, if we can take any questions.
I don't know if you want to answer, but I've got a quick answer, is that there's a lot of initiatives ongoing at the moment. One of them is putting all these documents into a blockchain scenarios. So your LC, your commercial invoice, they're all going to be blocked in a blockchain vault, and it will all be digital. So the actual documentation will flow with the transaction.
Yeah, but then the money will still flow after the delivery, right? Or, I mean, how do we see the needs of the customers right now?
The money will always probably flow after the delivery unless there's a prepayment involved in the transaction. But because of real-time cross-border, that will be instant. So once the goods are delivered, the documentation is delivered, is in the vault, it will then flow, the money will then flow immediately. So it's not, there's not going to be that delay that you would always have with paper documents. And even some of the banks today, even their digital processes feel like they're 20, 30 years old.
I think we are on time. I think that's about it. Thank you. Thank you, everyone.
Thank you. May I please request our panelists to rise for a group photo?